Hey there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing the 14th of March 2022. Risk-off theme slightly eases despite Russia-Ukraine conflict. Let's kick off by looking at those macroeconomic and geopolitical developments that we've seen over the past week. While the financial markets have again been dominated by the Russian invasion of Ukraine with shifts between risk-on and risk-off themes. Further punitive sanctions, including the US barring Russian oil imports, has increased the threat to global trade and global economic growth. Global commodity prices have again risen aggressively, but also plunged back lower, with wheat, nickel and energy prices still very much in focus. Ongoing inflationary pressures from surging commodity prices and the potential for a negative impact on growth rates has raised the spectre of stagflation. The release of the US CPI data on Thursday was the main data event of the week, which was in line with market expectations, up 0.8% in February and 7.9% over the prior 12 months, but it was still the most since January 1982. Now let's take a look at the global financial market developments for last week ending the 11th of March. Well, equity markets are rebounded strongly through the late part of February, but since we've gone into March, we've seen another significant sell-off in here. Markets did try and rebound through the middle of last week, but it was a very weak close, particularly for the tech sector in the US. NASDAQ getting back down close to recent lows in here. And the NASDAQ composite in here, and this is the NASDAQ 100, but the NASDAQ composite, its intraday low in here earlier last week was over 20% down from its peak from last year, which signals in bear market territory. European equity markets have been under more significant pressure, being the geographical location closer and the economic implications being closer to the conflict. And we've seen a significant plunge lower in here through late February, through early March. But last week, after initial weakness, the DAX here did manage, and European equities did manage, a significant rebound. On the bond side, US yields have surged back to higher yield territory, despite more recently we've seen lower yield moves, as we've seen bonds go higher in price, lower in yields, due to the fact that we've had a safe haven bid because of the conflict. But the threat of inflation through the commodity prices and stagflation have seen global and US and global bond markets all surge back higher over the past week, back up towards more recent high yield peaks seen this year. The US dollar has maintained its flight to quality bid. We did get a correction low at one point last week, but then a strong recovery going into the end of the week, rallying against the euro, the pound, and against the Japanese yen in a flight to quality bid for the US currency. The Australian dollar and most of the other commodity currencies have been more hesitant over the past week, having been strong with the rising commodity prices, and also particularly with Australia and New Zealand economies more insulated from the conflict, Ukraine-Russia. But we've seen more of a hesitancy, particularly as commodity prices have started to correct back lower to some extent. Gold in here continued initially its flight to quality bid, but however had a significant sell-off through last week, and that has now signalled a potential blowout top for gold. And similarly on crude in here, crude oil hitting another new multi-year high, just touching $130, but a significant sell-off last week in here, highlighting the fact that maybe a top is in, at least in the short term, for the oil market. And copper, we highlighted a breakout in here to a new multi-year high in here for copper last week. But the week before last. But last week, a significant sell-off in here, and maybe signifying that breakout was a bullish failure. Now let's take a look at the week ahead, commencing the 14th of March. Well, we're still going to be closely watching for any escalation or military developments in Ukraine, and also watching for potential for a ceasefire and for talks to start to maybe improve. Please do note that the US moved to daylight savings time on Sunday the 13th of March. And on the central bank side, it's a busy week for central banks. We get the RBA meeting minutes on Tuesday. The FOMC interest rate decision statement and press conferences on Wednesday. A 25 basis point increase in rates is very much priced in. And then going on through the week, the Bank of England interest rate decision statement and press conference comes on Thursday, and we get similar from the Bank of Japan on Friday. So nothing much of note on the data front on Monday. I say we've got those RBA meeting minutes Tuesday, Chinese retail sales, the UK employment report and German ZEW survey with US PPI also on Tuesday. We get US retail sales, Canadian CPI and the FOMC interest rate decision Wednesday. New Zealand GDP and Australian employment report come through on Thursday alongside that Bank of England decision on interest rates. And we get the Japanese CPI, the Bank of Japan interest rate decision statement and press conference, and Canadian retail sales on Friday. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you with another macro watch next week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.